Hello, hello. Nice to have you with us once again. We got a 32-page document sent to us on the Household Wellness Index. And my producer Natasha forwarded this thing to me and I thought, what the heck is a Household Wellness Index? And then started reading through it, and it's very interesting reading, actually. And that's why we've invited Bernadene de Clercq, who's the head of client management at Momentum, and Bernadene de Clercq, head of personal finance research at Unisa. These are the people who got together and brought out this wellness index, household wellness index. Good evening, ladies. Lovely to have you with us. Why did you two get involved? Where did this come from? Whose idea was this? How long have you been doing this wellness index?
We started with the index about a year and a half ago with the concept of what we thought about looking at the financial situation of households. And in the endeavors, we went through a lot of the research papers, what is possible, what is new, what hasn't been done, but what would provide us with a wealth of information on the household situation. And from that, we started then constructing the wellness index last year.
So you're basically trying to find out what state households are in South Africa.
That is very summarized version. I think it's important to understand what wellness means, what the definition of wellness is.
Right, what is it?
And that is for us, it's a multidisciplinary function. So it tells you a bit of the education level of the household. It tells you about the financial situation of the net wealth situation. It gives you an idea of the social support that the household have. It also tells you how a household can earn income. And then the last one is as well the locus of control. How do they survive in times? So it's just not a hard number figure telling us they've got so much assets or that's their debt level. It gives us a holistic picture of the household's financial situation.
Okay, I did the summary and I want you to do a summary now. How are we looking? Are we looking all right?
The majority of the South Africans are not looking that well. They are in the unwell or drifting unwell category, what we've called them. But you have households that are doing extremely well, and unfortunately also do have households that are not doing well at all.
Okay, we'll get onto these different categories and what they mean in just a moment. How did Momentum get involved here?
It's actually quite an interesting story how we were working independently from Unisa around the whole concept of financial wellness before we got to talk to Unisa. And we believe that Momentum has to shift the focus away from pushing a product to clients, but rather looking what the client need is. And when you look at the client need, clients want to be financially well. And the concept of financial wellness, Bernadene's got a lot of technical detail around that, but it's very much the absence of disease, the absence of financial disease. And we want to see how we can support clients, consumers out there, today and in the future, how they can actually improve their financial situation going forward at all levels, whether you're very rich or hoping to just make ends meet. And when we got hold of Unisa and we had our discussions initially, they've already gone into an extensive research process to actually understand what makes a household tick and what are the things that make a big difference. And that's going to add to what we're working on and actually enhance the value propositions we give to the consumers out there.
So in other words, what you're saying is you're going to use this sort of material that you're getting out of these research papers to develop new products which would be the sort of products that households would need or want in the future. Is that what you wanted to get out of it then?
Exactly. That's one of the spin-offs that we're going to get from this. The one is exactly what you're saying now, is that what is it that a client and a consumer out there really is going to need and is going to make the biggest difference? And we've already seen some trends like education and looking at how you can match creating some level of an asset base rather than just spending all your money and making your income work for you rather than the other way around. So we're already seeing how we can actually empower consumers with the right solutions. But the second part is actually also the education elements. And there's so much substance in the work that's being done from Unisa, but we want to bring that and educate and empower consumers and even legislators across the South African population to strengthen the financial wellness as a whole of our population.
Okay, let's jump into a few of the charts that you have in this document. The first one is the gross household income and year-over-year percentage change. We'll put that graph up for you, and I think that if you took a graph of the all-share index from 1996 to 2011, it would probably look a heck of a lot like that year-on-year percentage change, especially if you look at 2007 or 2008, where there was we were sitting right at the crest of a wave and bang, financial crisis hits and everything turns south. Who did you use to source these numbers from?
I think it's important that information is also part of another research that's expand on the wellness index. That's what we refer to the wealth indicator. So that is also constructed on a lot of the macroeconomic information that's available. So that's why that one relates with the past data. The wellness index was a once-off survey that was done last year, and we will continue to do it in the future. But that one also shows us, and that aligns with the wellness indicator, a lot of the households have the biggest assets, financial assets. And the majority of that is invested in pension funds and therefore in the JSE. So the correlation with what's happening in the JSE market has a direct impact on the wealth, of part of the wealth of the financial of the household.
Right.
So it is important to understand the underlying, and that's why we also try to understand what is the drivers of this wealth. So that's definitely looking at from a more broader macroeconomic one, and then we combine it with the micro side on the wellness index so that we actually can understand both sides of the coin.
And I think, can I maybe just add to what you're saying there, is adding to that is the trend that we've seen after the 2007 is that there are more consumers now recovering and spending their money. So we can see people are starting to spend money, but there's not enough actually saving anymore. So they're not building that asset base as much as they should be. And that's typically what we can get out of this information, that consumers need to build their asset base and start to invest again, other than just spending their money.
Well, on that note, let's take a look at another one of the graphs that you have from the South African Reserve Bank, their quarterly bulletin of March 2012. And you can see there, for example, that the non-life insurance premiums from 1995 up to last year have remained absolutely flat. That's obviously not good news for you.
No, there hasn't been much of a growth on the life insurance side of things, and we have seen that the trends have been very stagnant. And there hasn't been a lot of growth, and there's been a little bit of churning here and there. But that's also why looking at what is really important to those consumers and looking more into the longer term, how we can actually build those investments and build into the savings elements of things. But the first thing people leave when you can't actually put food in your children's mouths is insurance. And in the longer term, it can actually knock you more than not. So we also focus on that education element, is what is the impact? So from a financial wellness perspective, what is the impact of you not having insurance, of not having a retirement plan, of not having short-term cover? Those are the types of elements we want to bring in at a consumer level and create that understanding.
Just before we continue, because I want to look at where the money is spent, because that's a very interesting pie chart that you've got there. But just to come back to a question we touched on earlier, how many people did you actually use in this piece of research, and how did you get those people? How did you get to them?
For the wellness index, we had a sample of about 2,500 households.
Okay.
So we split it in between the did phone interviews. So we found about a quarter of them, and then we actually went door to door on the other 3/4. So we were in field simultaneously like the census. So we were that type of process that we actually sat down with people and asked them to complete our questionnaire. And
I would imagine this is mainly urban.
No, we went into rural as well. We tried to pick up what the whole purpose there was, to get a comprehensive idea of South Africa. So we divided the provinces. We had now 18 sections in the provinces, and we tried to have urban-rural differentiation that we can try understand it. And that's why we will take this forward annually to get more depth. We're now planning the next wave going into the field, so we're upping it to 8 to 4 sections per province instead of just the 2, again, to extend the coverage that we can really understand, because there's a big difference between a low-income balance sheet and a high-income balance sheet. And I want to add on what Leanne said, and coming back to your previous one on the graph as well, what is income on being spent. If you see what has changed in that graph is taxes. So the proportion that households are now paying on taxes is increasing. With interest rates being stable, that has been taken up. But if interest rate changes pick up again, there will still be less to save. So what we're trying to understand is who's saving in which products as well for this whole reform of the savings industry that Treasury is working with. That we can go back and say, but we have to look at different policies for different sections. You can't have one policy for the whole population. It's not working. It doesn't
fit them all.
It doesn't fit. And with this type of detailed insights, we can get more relevant and actual policy inputs that we can go back to Treasury and Reserve Bank and a lot of stakeholders that we're working with and say, But there's another viewpoint to this. Just look at what's happening on ground.
As you say, it's not just the consumer you're looking at here, it's also legislators, because
Yes.
they also need to be educated.
Yes.
A lot more than a lot of the consumers. And I was just wondering to myself, I would not like to have had your job going around urban areas, knocking on doors and saying, I'm here to do a survey, because I can imagine in some of the urban areas it's, what? No, go away.
Yeah, it is quite difficult. So, yeah, can we have an ad break, please, when we knock on your door? This is why we're there. Please fill in the form. It's really important. Now, we did a lot of trying to convince. There's a big trust issue in South Africa, and we must understand that. That why do you want to know? And it's very sensitive information we're asking.
Especially giving out details about what you're spending your money on.
Yeah, they're almost more willing to tell us that. What you earn, they don't want to tell, and what you have, because you're going to come back and steal it from me, so I'm not telling you. So there's a big trust issue to getting real data. Yeah, and there's no smokers in the country, and nobody smokes.
And everyone only drinks 2 beers a day. Let's get on to what people are spending money on, and it's a very interesting pie chart that you've come up with. Because for people who don't smoke, they spend a heck of a lot on food, beverages and tobacco, 26%. So the biggest things there really are your housing, water, electricity and fuel, and then transport.
You must remember, in terms of the national accounts, transport includes your car payment.
Okay.
So that's part of the transport that's so high.
So those are the three big, the three big ones that people are spending on, because that is what? That's 30, 40, 50, it's close to 60% of income is spent on those three categories. That's not leaving a hell of a lot of money to be invested.
Yeah, to put away for the future.
Yeah.
I think that's the big dynamic. Is
What percentage of disposable income are South Africans investing?
Very low percentage. I don't know the exact numbers, maybe you can confirm, but it will also depend on the target market and the segment we're in.
How much should we be? How much should we be?
We should look at, hopefully, if you can just put 10% of your money away on a monthly basis, then you can get to where you want to be at a retirement point. And that's where most people aren't even at. That's why we're looking at figures like 1 or 8% of people can actually retire at a sustainable rate. So we have that problem in South Africa. And people having sandwiched in the sandwich population, where you have to look after your parents and your children, because both of them aren't earning an income.
I want to get back to where this money is going and how much we should be allocating to start moving away from the research and getting into what we should be doing. Don't go anywhere. We'll be back in just a moment.